Village Main Reef reported a 64% fall in first half basic earnings per share to 5.92 cents. Gold production on a like-for-like basis, excluding Blyvoor, slipped close to 8% to 2602 kilograms. Now, Marius Saaiman, who's the joint CEO of Village Main Reef, joins us for more there. Well, you heard about the fall in earnings there. We know about that. Marius, what's behind that performance and in the broader context of a gold industry which is becoming under pressure again?
Absolutely. I think it was certainly a half year of two very distinct quarters for us, if you look at our results. In the September quarter, we saw record production at both Tau and our Cons merch operations, so really on the up from a production perspective. But that all turned around in our December quarter. We warned the market, given some of the actions that took place at our Blyvoor operations. I think it was a quarter from hell for Blyvoor, if you had to put it into perspective. Unprotected strikes, seismic action that took away 40% of our available panels, a restructuring that was required during this period of unrest at the operations. So the market was fully aware of the difficulties we faced at Blyvoor. I think what was disappointing was the performance of our Tau operations, which was really our star performer in the September quarter. And that was again on the back of work-related stoppages, safety stoppages. That has become a feature, I think, of the industry as a whole. And at Tau in particular, we had a fatal which resulted in stoppages early in sort of December. And then the Christmas effect in January obviously has a big impact on production, and that again was followed up with a further fatality at Tau. And the unfortunate loss of life for us is just completely unacceptable. Not just the loss of life, but the severe impact that has on the production of the operations. So the industry under pressure, certainly us as Village, where we have higher cost mines, under more pressure than some of the bigger producers, such as Anglo Gold. I think one of the things that is quite important for us as a sort of junior is the fact that we have some diversification in our portfolio. We're not purely a gold producer. We have a bit of exposure to antimony, and then we've got the Lesego Platinum project, maybe not a very sexy sector of the commodities world right now, but a world-class project, which is valued, in my view, at zero in our portfolio. So
of course, that diversification working to an extent to mitigate against some of the risks that come with doing gold mining in South Africa specifically. But you highlighted safety stoppages, as a result of strike action becoming somewhat of a theme within the industry. What lessons have been learned for you to put in place strategies to mitigate against those kind of risks moving forward within that gold division of the company?
Indeed. I think, we have to point out that to an extent, I think we fared better than some of our compatriots and peers in terms of the way that we were affected by these unprotected strikes. And we've always focused extensively on involving our labour organisations in our daily management, but also in terms of our campaigns to ensure that they contribute to the operations.
But it seems to have been more of a national thing. It's almost like an infectious attitude that's come through, regardless of individual mining HR approaches or ways of doing things.
I think to an extent, we were always going to be exposed at our Blyvoor operations, being between Kusasalethu and the KDC operations, where the action started in the gold sector. Having said that, though, we have seen real successes at some of our other operations. Tau and Biffles were not affected by the unprotected strikes. So I do think proactiveness from all of the leaders are quite important. Leadership as a whole, I think, is extremely important. And some of what we are seeing may be ascribed to the lack of leadership at management level, government level, and at organised labour. But certainly with the entry of AMCU, relationships between organised labour and management at the mines have become more complex, and will certainly continue to be so at all of our operations. Well, particularly at Blyvoor, we've now recognised AMCU, and that may impact the way that we, as a sector, negotiate wages and other matters going forward.
Of course, while you're managing relationships on the one hand, you've got to be managing costs on the other, and you've highlighted in your your highlight points of this morning's results that you've had a slower than anticipated startup when it comes to production. When do you expect production capacity to be running full steam ahead, and at what cost? That's always the big question, because a cash cost and what it's costing the business to access those higher production levels is front of mind for any shareholder.
Absolutely. I think quite important is that if you look at our results, we have been able to impact on costs quite positively. So overall cost half year on half year is down 13%. We've managed a further 8% reduction in absolute costs quarter on quarter. Now that's quite important, because unit costs in an environment where our production numbers are down is a little bit meaningless. I think ultimately our shareholders need to understand the impact that we're having on our costs, which is within our control, and that's gone very well. Production at all of our operations are now in full swing again, so all of the operations are actually producing. Even our Buffels operation, which had a fatality, we got upliftment in relation to that Section 54 yesterday. So all of our operations are producing. We're seeing some very positive signs, certainly from the Blyvoor underground operations, and Taulekwa is back to sort of normal levels. So I really do expect our March month to be normalized.
I don't know what you look at first when you wake up in the morning, but the gold price must be one of the things you look at first.
Indeed.
And this morning down below 1600, that's not been that low for quite a while, 1588. Do you have a gold price level where the alarm bells ring for your business?
We certainly, our Taulekwa operation under normalized circumstances is quite a high margin operation. So their gold price is not our biggest concern. It is a sub $1,000 full cash cost operation. So there's lots of margin at Tau. The real issue there is to keep production going. At Buffels and Blyvoor we are more stretched, and therefore, as the gold price comes down, pressure increases. I would say anything below sort of 400,000 rand a kilo in rand equivalent becomes difficult for us to maintain profitability.
Mm-hmm. Talk us through this share buyback strategy that you've implemented here, because right now you've invested some 63.8 million rand in repurchasing your own shares.
Yes, I think the market has consistently indicated to us that they expect us to do smart investments. And based on the cash that the operations are generating, we had two choices: either start paying more regular dividends, or to buy back our shares at these levels where we believe that the value that it presents is very attractive. And our shareholders at our annual general meeting gave us a mandate to buy back shares, a very aggressive mandate, up to 20%. And certainly the preference that was sort of communicated to us by our shareholders were that they would prefer us to buy back shares rather than to return the cash by way of dividends. Which we have aggressively done. Certainly at the current levels, we are trading at about a 40% discount to net asset value and at about 2 PE, with assets that really generate cash. So if this was just a exploration or development story, it would be somewhat different. But even in a quarter where we really struggled from a production perspective, we still generated 60 million of cash. So the assets are profitable, and as long as we generate cash, but the market do not recognize the value in the share price, I think it is justified to make that investment. Certainly our board believes that the share price is undervalued, and therefore the mandate to aggressively buy back shares.